The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day after the market close. Tom takes your phone calls from 4 to 6 p.m. Eastern Standard Time using the data available at that time.
Let's go to a Bill in Boca Raton. Hey, Bill, what's going on?
Not too much. Enjoying the warm weather in Florida just like you, except on the other coast.
Perfect, man. Perfect.
Yep.
Do you listen on the internet right now?
Yes.
Cool, man. Cool.
No, I enjoy that. That's in your Tiger TV and everything. I've been watching you for years, and you've really taken this whole programming to a level that's just phenomenal.
I appreciate it.
And now, here's Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 2 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's a TGIF Friday, folks, and I wish every one of you a happy holiday, happy 4th of July. Please be safe out there driving because we know no drinking and driving, folks. Let's take a look at one of our 4 agreements. Cultivate wisdom. You don't need to accumulate knowledge to become wise. Anyone can become wise. When you become wise, you respect your body, you respect your mind, and you respect your soul. When you become wise, your life is controlled by your heart, not your head. Market-wise, let's take a look at it out here. We had the Dow up 168, NASDAQ up 42, S&P's up 19, gold contract down $20, trading at $1,486 an ounce. Silver off 96 cents at $33.86. Platinum $1,719 an ounce. Copper up 3 pennies at $4.31 a pound. Light sweet crude down 67 cents, trading out at $94.75. Bonds down 10 ticks at 122.23. Dollar index off 3 ticks at 74.60. Euro up 2 ticks at 145.29. Yen up 26 at 80.82. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on out in your world. In the world of the S&Ps, let's take a look at them. What do you have? You're up $19. And where are we at? We are at 1339.67. Now, what that does, folks, is this. You go into your high volume day of the 31st, which was 1.5 billion. We did 860 million. You're at the 1339. More than likely, what you're going to see is it's going to tap out at the 1345. Correlation, when we were talking about even on the way down, that day was no doubt one heck of a day, meaning on the 31st. Market had gone to 1345. Next day, you go 1345 to 1313. We did that on June 1st with 1.189 billion shares. Market goes up on air today, which you can expect. Bottom line, why? Because you're coming into a holiday weekend, you're coming into July 4th, whole ball of wax. It's going to get really Tuesday, Wednesday. I suspect Wednesday and Thursday is going to be the deals out here. That is your S&P. We go into the Dow Industrials. Dow Industrials, this year's Dow Industrials go up $1.68. That goes over the 12,574 mark of the high volume day. You know, we'll see whether she can get any higher. She just made it. She made it with 860 million versus that 1.5 billion. The composite, NASDAQ composite. What we did with the composite out here, NASDAQ composite is up $42. We go 1.6 billion shares. What we're doing there is we're coming right into the 31st. The 31st, the high is 2835. We did 2.5 billion versus 1.6 billion. On the NASDAQ, folks, you're 850 million shot. Now, what we also have is this, which is really, well, depending where you are in this market, bottom line, in this market here, my take on it is that this is the end of the expansion on the way up. You know, you can tag out that 1345 in the S&P, which is like 6 points. We could tag that out on Tuesday morning. But what you have is that we have also, with this, we have a 5-day ARMS reading, folks, that is trading at a 2.26. That is insane. What that means specifically is that everyone is buying not only the exact same stocks, okay, but anything under a 3 is telling you you're going to get a pullback. We had a large uptick, too. Bottom line, we'll see how the Wednesday, Thursday, Friday of next week shake and bake. We had gold contract out here today. What we did with gold, gold did 128,000 contracts, traded down to a low of the 1478. We broke the B point, and you broke that B point. Check it out. This is pretty wild. We actually had less volume by, let's see, by 80 contracts. We did 128,826 contracts versus 129,000 contracts. Bottom line, we hit the 1478. 1464 is where this baby wants to go. Let's go to David in Clearwater. Hey, David, what's going on?
Hey, Tom, you gearing up for a great 4th?
Oh, absolutely, man. Nothing, it's all, I love the 4th of July, but what also happens is that it's having that extra day off is a beautiful thing, no doubt.
Yeah, no doubt, no doubt. So, I mean, we're going to be shut down, but forgive my inexperience, but will futures will be shut down in the U.S. but open abroad, or how does that work on Monday?
No, they're shut down. U.S. futures are shut down. Yeah, no, everyone's shut down. But 4th of July, man, no one can work. No. I'm only kidding. No, the markets are shut for sure.
Okay, question for you.
Yes.
Tiger Godley applied to the IWM we've been talking about the last couple of days.
Yes.
Since it's kind of rallied up, I've been reading your book, and A to B must equal C to D, and it looks like, unless I'm reading this wrong, the C to D is about close to about a 1.618 expansion or close to it within, like a 50 cents or so, relative to the A to B leg. So is the Tiger Godley off, or how does that stand?
No, I don't think so. You went 77.23 up to 81.3. Oh, yeah. No, I see what you're saying. Okay. Yeah. Yeah, it did. But, the stop's on the other side of the top of the X point, which is the 84.81.
Right. No, but I'm asking more of a generic question about the Tiger Godley. Let's say, forget the IWM for a minute. Let's just talk generically. Let's say you're looking at a chart. It's coming up on a 15-minute chart, trading whatever, futures, currencies, whatever the case may be. And the C to D, I've noticed, can hit like a 1.38 and even sometimes a 1.618 as it comes into the 786 retracement of the X to A leg, and still have the Gartley, in this case bearish one, work. So my question from a generic standpoint is, when you see the C to D, a larger expansion relative to the A to B, but still coming in with the other things you'd like to see, in other words, still got the B point on lighter volumes coming up towards a 786 retracement on the X to A with lighter volume, would you still short it at that point, or what do you do?
So what he's saying is this, folks, is that, see, I'm already shot the IWM. I went shot the IWM yesterday. So I went shot the IWM as the A to B equals C to D, and you're coming into, it was just shy of the 786. So now what has happened is that it has gone higher than the 7.8. And what happens there, folks, is that you put your stop on the other side of the X point. The other side of the X point in this case is $84.86 in the IWM. So what his question is that, would you go short here? Yeah, I'd do it in a second. And the reason being is that everything else is still in place, and all you've done, and what everything else means is this, folks. You took the B point out, you took it out with lighter volume. Today we did 57 million shares. You're going into 80 million shares. You're going into 80 million shares. So you're coming into there with lighter volume. All you're doing here is that, what that means is that you have even less risk and more reward, because you still put your stop at the same place.
Right.
Yeah. Cooking, brother.
Awesome.
Have a great one, man. Have a safe one. Let's go to Harlan in Massachusetts. Hey, Harlan, what's going on?
Hey, Tom, how you doing?
Doing great. You having a good day out there?
Oh, yeah. I'm digging that shirt you're wearing.
Oh, thanks, man.
I guess summertime is here.
Yeah.
Tom, what do you think about TZA?
I think it's a good trade. And we just went through it on the other side. So the IWM, folks, okay, when you look at the TZA is the 300% bear direction of the IWM. And the bottom line is that, if you get in the TZA, what you want to do is that you can, the way to trade the TZA is that you have to put your stop, you want to correlate it to put the stop on the other side of the IWM if that's what you're going to do.
Okay, that's what I was trying to figure.
Yeah,
okay.
that's how you want to trade it, because what you have is this. The the direct correlation is going to be 3 to 1. So like the TZA today, the TZA is coming into the bottom. It actually came into the bottom of the 33.27. It went to 32.90, closed at 33.11, and that's where that 3 to 1 correlation comes in. So when you're trading these, you have to trade them off the 1 to 1. So by the end of the day, you're not getting stopped out just because of the
the volatility.
Well, you expect the volatility, but what ends up happening is that because of the compounding part of it, okay, you have to basically, the TZA hasn't traded as long as the IWM, so to get a direct correlation, you want to do it off the IWM.
Gotcha.
Cooking, brother.
Okay, have a good 4th, Tom.
Have a great one, man. Have a safe one. Let's take a look at, so what happens, so let's go back to the TZA again for a second, folks. So what that means is that you can see the IWM is not at the swing point, where the TZA is at the swing point. That one swing point we're talking. So what ends up happening is that you'd have to take it and you got to tuck your stop somewhere under the swing, either from the 2nd of May or the 10th of May. That's how that little baby lines up. If we go up and we take a look at the GLD, what you have with the GLD today is that the GLD takes out the swing point of 145.20. Excuse me, folks. Does it with 16 million shares, closed at 144.93. What that's setting up is that the test, folks, of the GLD and the actual gold contract is the lows of May 5th. That's how that sets it up. And we get a question in the den about does more than a 0.618 retracement eliminate the ABC structure on the way down? So let's go over and we take a look at that. If we set up the IWM, and number one, yes, it does eliminate it, because if you do a contraction or expansion more than the 618, bottom line is that then that tells you that you're in a consolidation. So yes, it does. What ends up happening is that it got over the 618. It is approaching the 7.6 of that whole leg, meaning the 112-point ABC structure on the way down. So what that means is that now you get a consolidation. Consolidation, flat out, yes, it can go right back to the bottom of that market. And that what we just put up there was the IWM. We go into the, there she is, we go into the S&P or the SPY. You take a look at the SPY, and what that sets up, you also get over the 0.618. So what that also sets up is you have a consolidation. And that consolidation, and the reason I'm saying that you're still going to go back into the lows, folks, is that you still have all the volume down at the lows. And now what you have, it's pretty dramatic, too. You know, we're talking lows down there with 1.5 billion, and we just went topside this week with 900 million. Nice. Listen, 4 days of strength. No two ways about that. This is Tom O'Brien. This is TFNN. You stay right there. We'll come right back, folks.